We start with the troubled global banking sector. European markets have closed down more than 3%, spooked by a major sell-off of shares in the Swiss banking giant Credit Suisse. Coming days after the collapse of the US-based Silicon Valley Bank, it's prompted fears of a full-blown crisis in the sector.
Credit Suisse is a leading financial services company that provides round-the-clock advice on all financial matters to clients around the world. The company was founded in 1856 to finance the development of the Swiss rail system and has operations in over 50 countries. Credit Suisse offers a range of financial products, including sustainable financial and impact investment products, aimed at generating returns while fostering positive change. Credit Suisse has faced financial difficulties in recent years. In 2014, the bank pleaded guilty to federal charges of illegally allowing some U.S. customers to evade taxes and paid the federal government and New York financial regulators a total of $2.6 billion as part of the settlement. In 2023, Credit Suisse faces shares that have lost about three-quarters of their value in a year, and the bank's main backer, the Saudi National Bank, said it would no longer fund the bank. As a result, Credit Suisse has announced plans to raise up to $54 billion to strengthen liquidity and boost investor confidence. The bank also said it would buy back some of its own debt and borrow up to 50 billion Swiss francs, $53.7 billion, from the Swiss National Bank. In March 2023, Credit Suisse reportedly averted a major crisis by agreeing to be acquired by Swiss banking group UBS for more than $3 billion from him, according to SNB. UBS's acquisition of Credit Suisse is a merger, and a Credit Suisse shareholder will receive 1 share of his UBS stock for every 22.48 shares of Credit Suisse stock he owns. Credit Suisse offers a wide variety of financial services and products to customers around the world. These include transaction banking, trade finance, open banking APIs, sustainable finance and impact investment products. Credit Suisse also advises clients on all financial matters. The company has been in operation for over 160 years and has a purpose to underpin its values and drive its progress. Additionally, Credit Suisse has expanded its offerings beyond project finance to become a global financial services and investment bank. Credit Suisse offers a variety of investment services to its clients. These include alternative investment solutions for high-net-worth families and individuals, and single-family offices managed by leading investment professionals. Credit Suisse's investment banking and capital markets division offers a wide range of investment banking products and services, including advisory services related to mergers and acquisitions, divestitures and anti-takeover strategies, and debt and equity offerings. Our investment banking specialists provide seamless advice and a superior suite of products, services, research and tools backed by Credit Suisse's capital strength and integrity. With Credit Suisse Investment Solutions, Credit Suisse also offers personalized investment advice on attractive terms. Credit Suisse, Switzerland's second-largest bank, went bankrupt in March 2023 and was acquired by rival UBS for 3 billion Swiss francs, approximately $3.3 billion United States dollars. Banks have faced numerous scandals, management changes and significant losses in recent years. In February 2020, his then CEO of Credit Suisse, Tidjane Thiam, resigned following the 2019 spy scandal. Credit Suisse Wealth, his head of management, Iqbal Khan, joined his UBS and was subsequently monitored by private contractors to see if he was poaching clients. Credit Suisse has been embroiled in several scandals that have rocked investors in recent years, including mismanagement of funds revealed in its 2022 financial report. The sale of Credit Suisse shares began in 2021, sparked by losses related to the collapse of mutual funds Archegos and Greensill Capital. In January 2022, Antonio Horta Osorio stepped down as chairman for violating COVID-19 regulations, just 8 months after he was hired to fix the ailing bank. Credit Suisse confirmed last month that a client withdrew his 110 billion Swiss francs in the fourth quarter, while the bank posted its biggest annual loss since the financial crisis of 7.29 billion Swiss francs. In December, Credit Suisse raised his 4 billion Swiss francs from investors. According to Kenningham, Credit Suisse was widely seen as the weakest link among the major European banks. The company has been plagued by a string of failures and compliance failures in recent years, costing billions of dollars and leading to several top management reshuffles. It has been hit with fines and penalties related to tax evasion, misplaced betting, and other issues. In 2014, Credit Suisse pleaded guilty to federal authorities illegally allowing some U.S. customers to evade taxes. Credit Suisse has been embroiled in several scandals that have rocked investors in recent years, including mismanagement of funds revealed in its 2022 financial report. The bank fined him $2.6 billion, and in one of the bank's most explosive scandals yet, he pleaded guilty to decades of helping Americans dodge their taxes. Credit Suisse also pleaded guilty to defrauding investors in his $850 million loan to Mozambique to finance a tuna fishing fleet, and the settlement amounted to US and UK regulators taking his money. Paid out $475 million. In addition, a former Credit Suisse advisor committed long-term fraud against family members, which the court ruled and Credit Suisse believes will cost the lawsuit approximately $600 million. The failure of Silicon Valley Bank, SVB, has raised concerns about the stability of the banking sector and its impact on the economy. The banking sector relies on uninsured deposits, and the SVB collapse has highlighted the risks many banks face in their business portfolios. The banking crisis eroded confidence in the banking system, driving bank stocks down, with smaller bank stocks down more than 20% year-to-date. The banking crisis has also reduced the availability of bank credit, which is likely to affect the future availability of commercial real estate credit. The SVB collapse raises questions about a 2008-style crisis and how the Federal Reserve will respond. However, the U.S. has stricter banking regulations in place to protect the industry in the face of further turmoil, such as raising capital requirements to ensure banks have adequate reserves during a crisis. As the company did not operate like a typical bank and most of its investments were in the bond market and other securities that would lose value as interest rates rose, the SVB collapse does not necessarily portend further bank failures. Overall, U.S. bank failures are less common, and as of the end of 2022, SVB ranked 16th with assets of $209 billion. Therefore, there is little risk that SVB's failure will spread to other banks. However, a banking crisis can erode confidence in the banking system, drive investors and depositors away, tighten regulation, and make investors skeptical about the financial health of smaller banks. Silicon Valley Bank, SVB, and Credit Suisse are not technically related, but the recent crisis has raised concerns about the global banking system. SVB is a middle-tier bank that recently failed, causing a shortage of bank deposits. The failure of Credit Suisse, a global systemically important bank, has rekindled concerns about the stability of the global banking system. Credit Suisse faced an unrelated problem that had been simmering for years and escalated at the same time as SVB's bankruptcy. The sale of Credit Suisse to UBS has raised concerns about the proliferation of other financial institutions deemed too big to fail. At both SVB and Credit Suisse, executives took significant risks. SVB aggressively increased bank deposits and invested heavily in U.S. Treasuries. However, when interest rates rose and there was an indication of significant interest rate risk, the manager did not hedge this portfolio and left it unchanged. The risks taken by Credit Suisse executives were different, but still significant. The bank's capital was struggling with his holdings of now-defunct companies such as Greensill and Archegos. The fines, which piled up scandal after scandal, also affected his capital. The collapse of SVB and the sale of Credit Suisse to his UBS have raised concerns about the stability of the global banking system. It made clear that the risk taken by the management of both banks must be greater for the bankers. The collapse of SVB and the collapse of Credit Suisse's stake in companies such as Greensill and Archegos show that banks need to enter the game more cautiously. Credit Suisse, Switzerland's second-largest bank, went bankrupt in March 2023 and was acquired by rival UBS for 3 billion Swiss francs, approximately $3.3 billion United States dollars. The bank has been plagued by a string of scandals, management changes and significant losses in recent years. In February 2020, his then CEO of Credit Suisse, Tidjane Thiam, resigned following the 2019 spy scandal. Credit Suisse Wealth, his head of management, Iqbal Khan, joined his UBS and was subsequently monitored by private contractors to see if he was poaching clients. Credit Suisse confirmed that customers withdrew 110 billion Swiss francs in the fourth quarter, but the bank suffered its biggest annual loss of 7.29 billion Swiss francs since the financial crisis. Credit Suisse has acquired 4 billion Swiss francs investors in December 2022. The bank is one of the world's largest wealth managers and one of 30 global systemically important banks whose failure would have a negative impact on the entire financial system. Credit Suisse has announced it will raise up to $54 billion to boost liquidity and investor confidence, but some analysts believe it's probably not enough to reassure investors. Credit Suisse has been plagued by scandals and heavy financial losses in recent years. The bank also lost more than 7 billion Swiss francs from him in 2022, its biggest loss since 2008. According to various sources, the impact of Credit Suisse's recent troubles on India should be relatively minor. Credit Suisse has a small presence in India, with only one branch where he represents 0.1% of the country's total banking assets. Jefferies analysts estimate that Credit Suisse holds his 1.5% share of foreign bank assets in India. While there may be some volatility and crippling confidence, a banking crisis is unlikely to result in a major financial crisis too. Some experts see the Credit Suisse crisis as having minimal impact on the Indian market. The impact of the Credit Suisse crisis on the Indian economy is expected to be relatively small. Credit Suisse has assets of over 2,070 crore rupees in India, making him the 12th largest offshore bank in the country, but this is only a small fraction of India's total banking assets. Jefferies analysts estimate that Credit Suisse has his 1.5% share of foreign banking assets in India and he only has one branch in the country too. Foreign banks such as Credit Suisse have limited operations in India, minimizing the direct impact of the crisis. The recovery rally may be short-lived, but India's banking system is expected to be spared the troubles occurring in the global banking system. The Credit Suisse crisis is likely to make wealthy Indians wary of international money managers, according to Liechtenstein's royal family-backed firm. However, given the limited presence of Credit Suisse in the country, the impact of the crisis on the Indian banking sector should be relatively small. Credit Suisse has only one branch in India and holds a small share of the country's total banking assets. Rajesh Cheruvu, his MD and CIO at LGT Wealth India, said he sees minimal impact on the Indian market from the Credit Suisse crisis. Given the limited presence of Swiss banks in the country, the impact of the Credit Suisse crisis on the Indian banking sector should be relatively small. Credit Suisse has only one branch in India and holds a small share of the country's total banking assets. Equity analysts at Jefferies see Credit Suisse's lesser importance to the Indian banking sector, particularly in the derivatives market, where adjustments to counterparty risk ratings are looser. The crisis is not expected to have a significant direct impact on the Indian banking system. But the crisis could affect how wealthy Indians view international wealth managers. That's all from my side. Hope so you learned something from it. If you like this video, make sure you hit the like button and subscribe to our channel Trade Serpent, which brings you amazing stories and case studies. Push the bell icon for further videos.